right, with that, time to get to the other big story. This one coming in from Deal Street, where L&T has announced it's going to be selling its electric business for a whopping 14,000 crore rupees in an all-cash deal to Schneider. And now let's get the Schneider Managing Director in India here on ET Now exclusively. Incidentally, this is a story that first broke on ET Now. Anil Chaudhry now joining us. Hi, Mr. Chaudhry. Thank you so much for taking the time out and for this interview to ET Now. Congratulations. Schneider, with the backing of Temasek, to shell out nearly 14,000 crore rupees for L&T's electric business. Before I get into the details and the fine print, tell us what it is that appealed to you. Why did you decide to buy L&T's electric business?
Hello, and thank you. And we are very happy to have signed this agreement with L&T today for electrical and automation business. For sure, this business is very strategic and core for Schneider Electric. This transaction will bring Schneider Electric's global technology, digital offers, and global presence, and combine that with the L&T electrical and automation's domestic network of partners and reach, end-to-end R&D capabilities and manufacturing capabilities to provide best state-of-the-art solutions for our customers in India, as well as take it globally, and specifically in new economies in Middle East, Africa, and East Asia. So for us, it's a very, very strategic and core to our business deal, and we are very happy to have signed this today.
Okay, Mr. Chaudhry, now I want to get into the basics of it. You said that with this deal, you're going to be entering new markets like the Middle East. There are facilities that L&T's electric business is in Saudi Arabia, for example. It's in UAE. It's also in Indonesia, parts of Europe and Africa. So are you entering these markets? Is that what you mean by the new markets? And therefore, there should be no trouble then with the competition regulators?
No, it's not. We are already present in those markets. L&T has also those offer. When we are combining our capabilities, as I explained, we are strengthening our position and strengthening our offers to our customers. We will be able to offer wide range of products, solutions and services to our existing customers, as well as probably add more segments to offer our customers a wider range of solutions. And more importantly, with this deal, India, which is a very specific focus for Schneider Electric, will become the third largest country in terms of revenue at par with France. And with this deal, we are also creating the fourth hub in addition to US, China and France in India for developing technologies for India as well as India for globe. So these are the opportunities which this deal brings to Schneider Electric as well as to electrical and automation partners, customers, and more importantly, the employees and stakeholders to provide wider opportunities for all our stakeholders and customers.
You said that India is going to become the fourth largest business for Schneider globally. That's always good to hear. It's a Rise with India movement, which is, of course, our logo here on ET Now as well. Mr. Chaudhry, if I look at it, you're paying 14,000 crore rupees for L&T's electric business. It's an all-cash deal. Can you tell us what the sense behind the numbers? Can you give us an idea of that? Because if I look at the L&T website as well as its press release, the net revenues in the financial year 2017 was around 5,000 crore rupees, and you're paying $2.1 billion, 14,000 crores. How did you arrive at this?
So, first of all, this is a deal which is very strategic and core to our business. And this deal has, it has impact for our presence in India. As I said, India will become the third largest country within Schneider Electric and the fourth hub of Schneider Electric for innovation and developing the technologies. And this also is very strong commitment for Schneider Electric, which we have been showing in India, and value adds to our Make in India story, where what we produce today, almost 50% of that we are exporting. So being a strategic and a core to our values, the price which we have paid is right price as we see it, and it value adds to our strategic roadmap, not for today, for years to come in. And we have followed our internal processes to arrive at that value, and that's what we have agreed with L&T today.
Okay, but let me put it crudely. Do you think that maybe Schneider had to overpay or pay out as much as 14,000 crore rupees because L&T Electric Business had other suitors as well? We're talking about the likes of, for example, Siemens being in the fray. Many other companies were also in the fray. So do you think that maybe you had to up the ante and outbid the others? Along with Temasek, you had great backing?
So, of course, as you know, this deal is done jointly with our partner Temasek. So, we will be owning the 65% of this deal, and Temasek owns 35% of this deal. Now, as far as us as Schneider Electric, we consider this deal to be very strategic, and we also consider that Schneider Electric, this low voltage industrial automation business being core to our value, will provide probably the best opportunities to further develop the electrical and automation business and provide a lot of opportunities for very experienced and skilled management and teams which are there in electrical and automation, and which will contribute to our growth story in India as well as contribute to our growth story globally in terms of future product development, in terms of providing low cost R&D capabilities for us, with providing very cost competitive solutions in the market. And it also, for us, India being a very strategic country, it also reinforces our commitment in terms of Make in India. We are, whatever we are manufacturing in India, almost 50% we are exporting today. So that's for us is a very, very strategic one.
Mr. Chaudhry, you're going on saying how important the Indian market is for you, how this deal is strategic in nature, is only going to increase India's stature overall in Schneider's portfolio as well. So, Mr. Chaudhry, tell us, are you evaluating other options as well? How important is inorganic growth for Schneider? Once again, you do have the backing of the likes of Temasek, so money perhaps is not a big consideration. Are you looking at inorganic growth in a big way?
For sure, as you have seen the history of Schneider Electric, we have been growing our business here both organically and inorganically. Whenever a right opportunity comes in, which is the right fit for our core of the business and our strategic intent for the country in which we are doing those kind of deals, as well as for our global presence and global footprint, and how these the inorganic deals, whenever we do, how they complement our strengths globally as well as in the country in which we do deal. And this is one of those which is a very strategic for us, not only for India, as I said, it is for us a very strategic deal for global presence of Schneider Electric, especially for new economies, notably in Middle East, Africa and East Asia. And we are very, very happy to have signed this deal today with L&T.
Hi there, Mr. Chaudhry. Avan joining in as well. And certainly this seems to be a strategic acquisition for the company. In the past as well, you've made over half a dozen acquisitions since the year 2010. So I want to talk a little bit about your financials and what this deal is going to mean in terms of your overall revenues as well as your profits. What exactly is this going to bring to the table in terms of the financials for Schneider Electric?
So, electrical and automation business for L&T has been a very profitable business. And as far as I said, that with this deal, we will be, the third largest country of Schneider Electric at par with France to the tune of 1.6 billion revenues. And we, with the very profitable, contribution coming from electrical and automation business, we are very much convinced that this deal makes sense and brings a lot of value for our stakeholders, for our employees, for our partners, and for our, shareholders as well. And that's how we have taken all necessary steps and to sign this deal.
Yes, thank you so much, Mr. Chaudhry, for joining in on ET Now and giving us the rationale of this deal, what it brings to the table for your company and how you plan to drive the overall ENA business for L&T that you have just recently acquired. So ET Now was the first to break the story on the all-important deal. It has now actually culminated and the stock is certainly going to
So
be...
just one...
Yes, sir, go ahead.
Let me qualify one thing. We have at this stage only signed an agreement to do this deal. This deal is subject to statutory and regulatory approvals. Only after that we will be closing this deal. Till that time, both these companies continue to operate as they do it today, and this is what is very important for us to remain focused as our companies are operating today till the time the closing is done.
Point taken. Thank you so much for giving us that clarification.
The timeline being given is 18 months to get all of those statutory approvals. And
Sorry?
we'd already asked Mr. Chaudhry about whether competition regulations would be met, because there's so many countries that would be at play. But 18 months is a timeline provided by Schneider, Temasek, as well as L&T in their timelines to get all of those statutory approvals.
Absolutely. That was Mr. Chaudhry speaking to us first on ET Now about the deal. With that, we're completely out of time. Thanks so much for watching. Keep it with ET Now for all the latest news and updates.